like it's time to set the stage again for our next panel discussion. The topic, of course, being NBFCs striking a balance between financial credit inclusion and risk management.
My first question is to Anjaneya. A lot of reports have been about the JAM Trinity and success of that in India. What has been your experience in your organization and leveraging these in terms of financial inclusion?
From where we are, I think the largest impact for us has been in collections. As we heard that, it may seem actually our digital collections have gone up considerably. Pre-UPI, if a mandate bounced, there was that much limited option to target the customer digitally. And today, it is that much more easier thanks to the proliferation of so many payment apps that you could send in-app notifications and make the collections happen. So for us, I think that has been the real benefit of the JAM Trinity, so to say.
My next question is for Mehernosh. While retail lending is getting more and more digitized, how is the MSME lending side playing out?
I think on the MSMEs, I think the heart of the question is, have they started to adopt and accept technology? And if you were to look at their core businesses that they do, because frankly, lending is just one thing that the MSME is doing. But for his core business, which is to say, can I get more customers for the products and services that I produce or manufacture? They have started using or adopting technologies, right? And that to some extent is having a very good rub-on effect even on the MSME lending market.
My next question is for Rakesh Singh. How do we ensure risk management digitally, especially in the MSME and business lending?
We are in the business of lending. If we are giving money, we celebrate when we get the money back and not when we disburse the money. So it's clearly, and if you are building a lending business, it has to sustain for a longer period of time. So it has to be, risk management is the key. And how do we underwrite a customer, whether it's a consumer or MSME? I think it's very, very important that we use his capability, his credentials to really underwrite the customer.
Asim, the next question is for you. Many banks and NBFCs were competing for the middle income borrowers in tier 1 and tier 2 cities until a few years ago. How has that changed?
Public sector banks over the years had a business model of collecting deposits from small towns and lending in large towns. This started to slowly change because there was no retail in India before 1992. That is when retail really kicked off. And from 95, private sector banks came in and brought about the bigger retail revolution in lending. So that is when the table started to turn. But even then, the model continued to be lend retail in urban centers. When credit scoring came in, that became the first watershed moment when this began to change. Then with technology coming up, with Jan Dhan, Aadhaar, mobile, all of that coming in, slowly it started being possible to go into rural India.
I have the last question for you, Gaurav. What more would you like to see the government do to make this more robust, continue the growth or accelerate the growth, and have a better framework?
I think if we all can play a role is in educating customers on how this entire building your credit score or building your credit history works, I think that will be a good start.
I want to thank my esteemed panelists for a wonderful discussion, a lot of insight.